Scientific. The numbers looked quite good, in fact, and quite stable on a sequential basis as well as on a year-on-year basis. We're joined now by Manish Gupta, the CEO of the company, who joins us currently. Hi, Mr. Gupta. Thanks so much for joining in this morning. In fact, if you just take a look at it, the top line looked quite good. There was a big surge in revenue. Could you give us some details in terms of what was your sales mix? And also, you've done a couple of inorganic, you've done a couple of acquisitions. So what was the inorganic part of this top line?
Yeah, so first of all, thanks for taking us on the call. Fundamentally, this quarter has been a significant quarter as we have made some strategic progress as also operational progress. At a strategic level, we completed the acquisition of Lyca's animal health business, which helps us build on the cattle part of the business, which is certainly the more lucrative part of business. That business on its own has grown 43% for us in the first half. Our Turkish facility got EU GMP approval under the new guidelines, and we also fully operationalized the Vizag facility, which is a dedicated facility for veterinary APIs. On the operational front, the 47% growth is driven by both the veterinary business, the aloe vera business, as also the human API business. And currently, our product mix or business mix continues to be about 50-50. Okay. None of this growth has come from inorganic acquisitions because Lyca business is getting consolidated only from 1st October.
Okay. So in the coming quarter, what would be the contribution from the Lyca business in the coming 2 quarters? So
Lyca itself, by itself, is only about a 30 crore business. So it will only add about 15 crores in the second half.
So Provet's business has already been accounted for in these numbers.
That's correct.
Okay. Could you help us with what the consolidated margins of the company will look like in the coming 2 quarters?
So currently we are running at 13%, right, which is a big shift vis-a-vis the last year, wherein in some of the quarters we even had negative EBITDA margins. Having said that, we will continue to maintain or slightly grow this EBITDA margins. We do not expect a significant jump because our R&D investments are ramping up significantly.
All right, Mr. Gupta, then there's a considerable amount of ramp-up that's happening, as you mentioned. What's your target for this year? And I believe in FY18 you had a target of more than 1,000 crores. Are you on course to do that? And how will you do that? More inorganic growth?
Yeah, certainly. I think we have strengthened our balance sheet in the earlier part of the year when we raised QIP money. That clearly will be put to good use in the next 2 quarters. And we are well on track on achieving our targets for FY18.
So what do you mean by put to good use? Any thoughts?
Sorry, come again?
So you said you're planning to use the QIP money to good use. Could you help us with how you're planning to utilize it?
I won't be able to give significant details, but clearly that money is earmarked for inorganic growth, and that is something we are working on. We do foresee some significant utilization of that money going forward.
All right, Mr. Gupta, I just took that number offhand, the 1,000 crores in FY18. What exactly is your target, both on the top line as well as margins? I believe you have some margin expansion plans as well?
Yes, certainly. So, let me put it this way. We are in a discovery phase as far as our company is concerned.
Okay, all right, then I think thanks so much, Mr. Gupta, for joining in today. But I believe we have ITC